All right. What's up, everybody? Joe Person here, Pinellas Realty, coming at you from the one and only beautiful St. Petersburg, Florida. Here is your real estate market update for the summer of 2025. Redfin, as a source, says just over 57,000 home purchase agreements were canceled in the month of June. That's 14.9% of all contracts for the month, y'all. And it's the highest June cancellation rate that they've seen since they began tracking this number all the way back in 2017. So, in today's update, I'm bringing you the freshest Pinellas County 727 market data. We're going to break down what this means for both buyers and for sellers. We'll tell you which parts of the market are still moving and which parts are slowing faster than others. All right, let's look at what's happening behind the scenes, both nationally and locally. All right, here is your market snapshot. Nationally, 14.9% of all U.S. deals fell apart in the month of June. Again, more than 57,000 cancellations in one single month. Why is that a big deal? Well, that's a great question, and I'm so glad that you asked it. It's a big deal because June is usually one of the strongest months that we have for closings. Right here in Pinellas County, 727, we're actually seeing some very similar signs. More listings are coming back on the market. Buyers are showing hesitation, and the momentum is certainly starting to soften. In July, our median sales price was down about 6.1% year over year, and the number of days on market are trending higher. Inventory, yep, that too, it's also up, shifting the balance of power toward the buyers in some price ranges. Nationally, new listings are up 8.4%. That's the highest in almost 3 years. Nearly 38% of active listings have had a price cut. Total inventory is up 32% from just 1 year ago. Now, that might sound like trouble, but there's more to it, right? Pending sales are down in many markets, yet mortgage purchase applications rose 2% last week and are up another 18% just from last year. We're actually starting to see a pretty mixed picture. Some buyers, well, they're okay with walking away, while others are stepping in when the price and the terms make a little bit more sense. See, here's the thing. If you're selling, pricing and presentation, it still matters. But so does knowing exactly which segment you're competing in. All right, for buyers, this market actually does have a little bit of a silver lining. With more listings and fewer active buyers, you're more likely to find a motivated seller, especially in categories where inventory is starting to build up. Price drops are becoming more common. And listen up, you guys, here's a gem. Assumable mortgages are out there if you know where to look. Now hold on, I'm not saying they're out there and they're gonna be everywhere, but they can be a total game changer if you're looking to avoid today's 7-point-something% interest rates. Bottom line, guys, we're still closing deals every week, but the pace isn't really what it was in 2021 or 2022. And guess what? It's not coming back overnight either. So here's how I calculated the latest contract ratios. That's going to be the number of new pending sales divided by the number of active listings in the MLS for that month. You got it? Okay. Let's touch on single family homes. Last year, we had 973 pending sales, 2,440 active listings. You do the math, it's a 39.9% ratio. This year, 946 pending, 3,538 active, about 26.7%. Moving over to townhomes and condos. Last year, 673 pending, 3,405 active, again, 19.8%. This year, 566 pending, 3,950 active, about 14.3%. The whole month supply is calculated by taking active listings and dividing them by the monthly sales pace. Guess what? It's also up. Single family homes coming in at 4.2 months. Condos and townhouses coming in at 7.7 months. So what should be your takeaway? Well, not all property types are performing the same. Your price, your presentation, and the number of homes that you're competing against at your price point are what make all the difference. And Redfin forecasts another 1% national price dip by this year's end. Some markets are going to hold steady, but the bottom line is others are already seeing sharper drops, especially on certain property types. Meanwhile, these mortgage rates are continuing to hover near 7%. And I can tell you, If that holds, it's probably pretty safe to say we can expect continued buyer caution and likely longer than normal times on market. All right, zooming in here locally, St. Pete, prices down about 5.5% year over year, with days on market continuing to climb. Largo showing up, prices are actually up 3.9%, but they're still seeing longer than normal market times. Countywide, let's look at all 727 as a whole. Supply up 28% year over year. Demand, which is measured by new pendings, is down about 8%. That very single thing is the very gap of why we're leaning into a buyer's market, even if some zip codes still feel competitive. Alrighty, now if you feel like this was helpful, give this video a like, maybe even a subscribe. That way you can stay informed for more updates. My team specializes in St. Pete, in Pinellas County, in all things 727, and we can help you navigate this shifting market. If you want a customized, no-pressure report for your home, even in your zip code, send me a message or drop a comment below, and we'll be here for you. In fact, I'll get back to you, and I'll send you a breakdown that will help you plan your next move. All right, there's your update, 727. I'm going to go enjoy my day in St. Pete. I hope you enjoy yours as well.